Hello class, my name is Jake Martino, our team is Team 10, Team No Idea, and along with my teammates Paul, Parker, Michael, Andrew, and Patrick, we will be discussing what federal identity theft laws exist and how the U.S. government investigates and enforces these laws. First, we need to define identity theft. The definition of identity theft according to dictionary.com is the fraudulent appropriation and use of someone's identity or personal data or documents, such as a credit card.
There are many different types of identity theft. We are going to discuss the most common types that occur in the United States. According to lifelock.com, the two most common types of identity theft are text-related identity theft and credit card theft.
You know what? Imitation is the most sincere form of flattery, so I thank you. Identity theft is not a joke, Jim. Millions of families suffer every year. Michael! Oh, that's funny. Michael!
As far as tax-related identity theft goes, if a particular person is able to have access to another person's social security number, he or she will most likely file a tax return claiming a fraudulent refund in order to gain a lot of money in return. The person who actually holds that social security number should see a red flag in the case when a tax return has already been filed and he or she is unaware of doing that.
Next, we are going to discuss what identity theft laws exist and how those laws have changed over time. According to the Office for Victims of Crime, prior to the implementation of the Identity Theft and Assumption Deterrence Act of 1998, identity theft was classified as false personation, which is the crime of falsely assuming the identity of another to gain a benefit or avoid an expense. At the time, false personation could result in a misdemeanor or a felony, but once the act was passed, identity theft was considered a much worse offense than it previously was, as it would now only be classified as a federal crime. According to the Identity Theft and Assumption Deterrence Act, it would be a federal crime to knowingly transfer or use, without lawful authority, a means of identification of another person with the intent to commit or to aid or abet any unlawful activity that constitutes a violation of federal law, or that constitutes a felony under any applicable state or local law. In other words, if someone steals another person's identity and uses their identity to break the law, they're in violation of this act.
Some other laws have been passed to protect victims of identity theft as well. The Fair and Accurate Credit Transaction Act of 2003 was passed to amend the Fair Credit Reporting Act. FACTA increased the amount of protection an identity theft victim has by making reporting agencies and creditors help people who have suffered from identity theft. If a creditor or agency comes across any suspicious activity on a consumer's account, they are now required to let the consumer know that they are a possible victim of identity theft. If consumers, while reviewing their bank or credit statements, find a purchase that they did not make, they now have the right to dispute the action that was taken on their account, and agencies are required to investigate the claims and fix any inaccurate information. Another act that was passed is the Identity Theft Penalty Enhancement Act of 2004. The act was created to make harsher penalties for aggravated identity theft. People who commit more serious crimes like terrorism can be charged under this act and therefore will suffer much worse consequences, like having longer sentences.
Victims of identity theft can report their case to identitytheft.gov. On this website, victims report exactly what types of identity theft they have encountered and their personal information. This information will be used by law enforcement agency in investigations. According to the Department of Justice, federal prosecutors work with agencies like the FBI and Secret Service to prosecute those cases.
IRS Criminal Investigation is one of the groups that works to prevent tax fraud and helps any victims who have suffered from it. They created a questionable refund program that monitors tax returns and searches for any discrepancies. The program looks for suspicious refunds and red flags them. Once a case of refund fraud has been discovered, the information is sent to one of their field offices where an investigation is conducted and evidence is gathered. With this evidence, the victim can move forward with the case and be compensated for damages.
Now I'm going to discuss an example of a recent identity theft case that occurred in Orlando, Florida. In 2013, Manuel Santana started depositing federal tax refunds into his personal bank accounts. Evidence claims that Santana embezzled 47 checks. He was able to deposit these checks because Santana forged his signatures. In 2017, the court sent Santana to prison and required him to pay more than $60,000. On top of stealing money from the government, the court also claimed this case as an aggravated identity theft.
Individuals can create healthy habits to help secure their identities. An individual's social security number should only be given out when absolutely necessary. Don't respond to uninvited requests for personal information. That means emails or phone calls that are requesting for personal information should signal a red flag. It is important to review credit card and bank account statements regularly to ensure that the purchases made are legitimate. Creating complex passwords on personal accounts can also help solve this problem. These habits might be very simple, but can make the difference in ensuring the safety of one's identity. At the end of the day, you don't have to be an IT expert to help prevent identity theft. It all comes down to common sense.
Identity theft occurs every day all around the world. However, it can be prevented through safe practices when surfing the web and giving out personal information. U.S. government's regulations such as FACTA and the FCRA have been created to help victims of identity theft and prevent future identity theft cases. These governmental regulations provide strict punishment for identity thieves and protect consumers. If you follow our recommendations and safe practices when giving out personal information, you can protect yourself from identity theft.